Yo, what's up, Richies? Hope you're doing well, man. Hello, hello, hello. Let's give it some time. I'm doing great, man. What about you? I mean, it's almost a weekend, right? And it's been a while since I've streamed on YouTube, so I figured I'd do a live stream anyways. Yeah, I definitely like the font on the landing page, yeah. What, you got any improvements or any suggestions? I think it looks nice. Nice and easy. Right? I think it's looking sexy, to be honest. I like it. Yo, Jay, what's up, man? Hope you're doing well. Yeah, it's a different style. It's like, you know, a bit more easy on the eyes. Anyways, not why we're here, right? We're here for the goodies, for the sauce. We'll go over that in a bit. Yeah, that's, you know, that was the goal as well, right? Especially when, you know, when we've got multiple things launching as well. I'd prefer to have a proper website. So, yeah. Anyways, you guys have any plans for the weekend? Nice reaction there from Bitcoin. Meanwhile, let's have a little of a chit chat and then we get this going. Let's open up some things. The blue team, one more. Not this one. I would like to have this one. Looking good, looking good. You're watching Dune 2 today? Bro, you're in for a treat, man. I'm actually going for the second time tomorrow. Like, I've watched it in cinema. Are you going to go towards IMAX or not? Bro, I'll be honest, like, I grew up with Lord of the Rings and all the goodies, right? But I'll make a bold statement where, you know, the Dune series will be bigger. Like, it's insane. Dune 2 is insane. The visuals, the audio, the effects, like, it's amazing, bro. Well, you know, as long as you're going to the big screen, to be honest. I didn't read the book, to be honest. Mainly because I've heard that there's like 60 parts or 19 books or whatever. So, and you know, Opium, when you've watched Dune 2, make sure you're going to be watching Dune 1 again. Because when you're watching Dune 1 after Dune 2, you'll like, oh shit, or you know, all the things start to click. Yo, what's up, Pomposaurus Rex? My nice little T-Rex. Hope you're doing well, bro. All right, that's good to hear, Jay. My trading week so far, I'll be honest. You know, we hit a nice trade here today from the rejection of the previous month VWAP back towards previous quarterly value area high. But yesterday was a bit of a tricky one. I ended up taking a short there, and then it took me out on this candle, and then I took a long there with my validation below this low took partial profits there, and my stops flat, thinking that we would go towards the equal highs, and then I woke up towards, you know, a fucking round trip, right? So the trading week so far, I mean, for me personally, it hasn't been the cleanest price action so far this week. I mean, it's been pretty, especially when, we were looking for longs on a sweep of this low, and look at this tiny mini sweep there. I mean, that's not a bit unfortunate. So that basically concludes my trading week. I'm still in a short with my stops flat, but I took out 80% of the short there. Now we're getting a decent reaction. So I think, if we're getting acceptance back above 67, that will be good. What you doing yesterday is prep for today. That's awesome, because the film will start exactly where it ended, the part 1. Because I was watching I didn't rewatch Dune 1 before I watched part 2, and I won't say any spoilers whatsoever. But I was in the cinema and I was like, fuck, I should have watched part 1, because right now I don't know where we left off. But they're starting exactly where they left off. So I'm jealous. I envy you that you're going to be watching it for the first time. But I'm going for the second time to the cinemas with the wife tomorrow, so going to be good. Anyways. Is everybody ready? Good thing is that I don't have to press record, so I can't forget that during a stream, can I? Okay, so it's been a while. It's been way too long. I've missed this. We're going to be doing quite the stream today, because we're going to be discussing my higher time frame approach based on VWAP, the yearly and the quarterly values. We're going to be taking a look at market profile, especially the monthly profiles, because I think we're in a very important position. Then I'm going to be taking a look at some other important metrics like the anchored VWAP from all-time high, the 30-day rolling VWAP. We're going to be taking a look at the weekly RSI. So we're going to be taking a look at all the goodies, to be honest. So if you really want to know how I do a systematical top-down on Bitcoin, then this is going to be the stream for you, because we're going over all of the things that I use. What is up, Mr. Green? Hope you're well, man. So as always, guys, this stream is sponsored by Bybit. If you want to promote the channel, you can use the link in the description below. If you have questions throughout the stream, or you want to discuss particular aspects of what I'm or what we are debating during the stream, just let me know in the chat, and we've got plenty of time today to work with. Just a quick heads up, I'm alone with my son today. My son is watching TV, so if he pops into the stream, you'll hear him talk. So that we might have a little bit of a Q&A there, but it is what it is. I wanted to stream anyway. So without further ado, let's get started. And we're going to be starting off right on the yearly VWAP. Now, what's so important about the yearly VWAP? Well, I want to outline here that on the current yearly VWAP, and let's move this out of the way. Right now, we saw the year open up, and then obviously in the beginning of the year, this is not something that we're going to be using, because the yearly VWAP is only going to be auctionable after the first quarter, right? Because in the first month of the year, this is basically a monthly VWAP. In the first quarter of the year, this is basically a quarterly VWAP. And that's the funny thing, because I see, VWAPs become more popular on Twitter, and, I can't blame them, because it's a wonderful tool. But, please, if we're trading in the first week of the quarter, don't say we've got quarterly resistance. No, we don't, because it's a weekly VWAP at that point, right? We start using yearly VWAP after the first quarter. We start using quarterly VWAP after the first month, right? And so on and so on. So we've got the first quarter in. That means that we can start using yearly developing value area high as a yearly pivot. That means that, this is support. This is support. So from a yearly perspective, we could argue that from a previous year value, which is this value area right there, we are imbalanced up, which is bullish. From the developing value on the yearly, we can state that we're retesting developing value area high, retesting developing value area high, and so far, Bitcoin is not able to accept back within value. That means we're bullish. So if we go back in time, We go all the way back, all the way back. And we go back towards this year, where we had the previous all-time high distribution. Take a look at what happened, right? We've got a retest there at the upper boundaries of that band, support. Retest support, let's annotate it. So we are unable to accept back within developing value. Unable to accept back within developing value. What happens every time we see new highs? We see new highs, right? Now, what happens when we get a definitive break within developing value? And what do I mean by that? I mean by that, once we start trading deeper within developing value and we've got this gap there, right? We've got time and space. We're able to draw at least half a signal there. This means that we have a genuine shift in condition where we go from an imbalanced market back to what? A rotational environment between the extremes of that developing value. No surprise that this first genuine shift, followed by the inability to accept back above developing value, is your trigger that we're heading towards what? VWAP and developing value area low, and eventually this led to a multiple or to the prolonged bear market. Okay, so once we start trading back within developing value, where do we go? VWAP. Once we start trading back above VWAP, where do we go? Developing value area high. So it's essentially a range. Now, going back towards what we have, all the way back to what we have, can we all agree that even though that things are starting to look a bit iffy, right? I think everybody can agree that we're starting to get a bit cautious. Are we going to be topping out here? Is Bitcoin, is this time different once again? I mean, it's the exact same playbook as the previous halving, but is this time different? Well, can you guys let me know in the chat? I would like to know your opinion. Do we have a shifting condition here? Like, do we have acceptance within yearly developing value? Yes or no? Let me know. Type in a Y or type in an N. And then everybody that says yes, we're going to be laughing at them. So feel free to do so. Exactly. We do not have a shifting condition. Awesome. All right. So that means we've defined what on the yearly? We've defined that we need to remain bullish here for as long as we're trading above what? For as long as we're trading above yearly developing value area high. It's a systematical approach, right? No emotions. When are we going to go towards 100K? Asks Blink. I think next week. I mean, if we all buy right here, then we're going to go towards it, right? At least that's my point of view. But we've tackled it right now, right? The yearly is telling us that we're still holding this as support. We're likely to remain imbalanced up with a target of new highs. That's the yearly. Now, what changes when we're getting a break below the developing value area high? We're spending time and space between that retest, and at that point, this up close candle before we broke lower becomes resistance, confluent with developing value area high, unable to break above, unable to break above. If we're getting that, guess what happens? At that point, I think we're going to roll over, and from a yearly perspective, right, going back all the way, let's go back, because this is very important. Once we reject there, and we accept backward in developing value, where do we go? VWAP, eventually value area low. Now, for the sake of my spot positions, I certainly hope not that we're going to go all the way back towards 44K. But we need to approach this with as little emotion as possible, right? So we're just going to be treating the levels as they are. I can't really give two fucks about Bitcoin is going towards 100K or 30K. All I know from a yearly perspective is that once we do break within value, I need to let go of all my emotions that we need to go towards all-time high or that we're going to be having a halving in April. I know that from a pivotal standpoint there, that the next likely destination is going to be VWAP. Acceptance below, rejection, VWAP, right? Conversely, failure to break below means what? 100K. Okay, yearly done. Is that clear for everybody? Let me know in the chat. Pretty simple, pretty straightforward so far. And if it's unclear to you, let me know as well, because we've got plenty of time, as I said. Okay. So that's the yearly done. That means we're going to be moving towards a one time frame lower, which is the quarterly time frame. And when I'm doing a top down, I usually tend to cap it at the yearly and the quarterly, because everything below the quarterly, I mean, the monthly can be used, but we're using the monthly within TPO, which I will show you in a bit. So within VWAP, we're using the yearly and the quarterly to give a higher time frame approach, right? If I'm going to be using a weekly time frame within a top down, I mean, it's good for intraday trades, but you know, from a longer term perspective, doesn't really matter where we are trading based on the weekly. So moving towards quarterly, very important, very interesting chart here. On the quarterly, we had a couple of interesting developments here. And the reason is we had these are all quarterly values, right? We had, from the start of this run up, we had 1, 2, 3, 4, 5, and now 6 quarterly values to work with. Let's break them down to see what happened each quarter. In this case, we had support at previous quarterly value area high. Support at previous quarterly value area high. Do you guys see that? We do not have time and space below quarterly value area high, indicating bullish, right? And indicating up. In this case, let me zoom in a bit more for you guys. In this case, what did we do? We retest quarterly value area high, and then we start trading below. Look at the time and space here between that retest. Rejection at the quarterly value area high. Similar to what we discussed on the yearly, what happens next? No surprise, right? We fuck off back towards quarterly VWAP. Break below VWAP. What do we do? Hello, quarterly value area low. Pretty straightforward, right? So in this case, we broke below quarterly value area high, resistance, and then we fucked off towards value area low there. Next quarter, open up the quarter there. You know, no trade for me because we're trading in the middle of quarterly value. We didn't retest quarterly value area low. No trade for me. In this case, retest quarterly VWAP, and we hold it as support. This is the first trade. Where do we go? Value area high, right? Then we start trading above value area high. Boom, rally. So do you see the significance of the value area high? If you want to be looking for longs, we need to see that shift above, all right? Moving towards the next quarterly value in this example. Right here, retested as support, but then what happened? We started trading below. In this case, there's no trade here. The trade here is once we start to retest it, you want to be looking for shorts, invalidation there, right? Let's say that we got short there. I got short because I remember this vividly because I wanted to see, you know, these lows being ran into a previous quarterly VWAP. Got taken out of my short. Then what happened? We started consolidating above quarterly value area high, meaning as we go by the previous interactions with quarterly value area high, right? The moment Bitcoin starts trading back above quarterly value area high, it is often setting up for the next leg upwards. Got long, there we go, right? Hi daddy, making profits. So that being said, moving towards what we currently have. Now, what do we have? Do we have a genuine shift in condition below quarterly value area high? And let me know in the chat. Do we have it? Let's see. Is this going to be a bearish interaction or a bullish interaction? Purely going off the value area high that we currently have within the quarter. And the quarterly value area high is around 66. And I remember this 66,060. Quarterly value area high. Bullish, as Angelo would say. Exactly. Well said, Jay. Bullish, bullish, bullish. So this level, the 66,060, going back towards yearly developing value, right? Yearly developing value lining up with developing value area high, right? Previous quarterly value area high lining up with yearly developing value area high. So both the quarterly and the yearly right now are telling us, all right, guys, right? I know everything is starting to look like shit, but bear with me. we need to wait for that real shift back below, because at that point we can look for shorts. And maybe, right, maybe we're wrong. Let's say that we do accept back below, we look for shorts there, and what happens next is that we accept back above that quarterly value. I don't really care about that, because if anything, if this happens, this is an even better trade, because this right here tells you that we try to go back to a rotational environment targeting that VWAP. However, bears were so weak that they couldn't even hold previous quarterly value area high as resistance, and now we're trading back above, right? So that means we're going to be longing this fucker targeting new highs. So based on a higher time frame perspective, right? Let's narrow things down, and I've written it right here, and let's write down some yearly values and quarterly values within the single chart, because we have some levels of confluence, right? Confluence. Don't know if I type it like that, but I think so. We've got yearly developing value area high and previous quarterly value area high at 66.320, and the quarterly is at 66.060. What else do we have? We've got a yearly VWAP and previous quarterly VWAP confluence, because the yearly VWAP is at 55.5k and the previous quarterly VWAP is at 54.980, right? And then we've got a bunch more, but let's just focus on these two going forward, right? So what this tells us is that this area, 66.3 up until 66k, is a very important pivot. And we need to remain bullish for as long as we're trading above. If we're unable to hold this as support, at that point we might shift towards shorts and we can target the next level of confluence. Now, what's the next level of confluence? It's the previous quarterly VWAP confluent with yearly VWAP, and they come in at 55.5 and 54.980. So that basically sums it up based on VWAP here. Is this clear so far for everybody? Why these are such important pivots? If we take a look at this chart, for example, right? Previous quarterly value area high. Look at the interaction, right? Just sex. This is sex, right? Beautiful level. Interaction, there we go. The one thing that I do want to point out is that, are we going to be treating this as a hard line? Are we going to be treating 66 or, 66.320 as a hard line where, if you're going to be the guy that says, well, we're trading below 66.2, fuck, we're heading towards 55k. No, that's not how it works. If we take a look at the previous interactions with quarterly values, we can clearly see that we have, it can dive in it can dig into the value area high by quite a margin and still not be bearish, right? What makes it bearish is if we actually find time and space, right? That true shifting condition below the value area high. And we currently just don't have it. So I can't validate any shorts unless we have it on the higher time frame, okay? So moving forward, and I don't want to move towards this yet. I want to move towards TPO because that fits in better. So who in here today is familiar with TPO? Do we have any new people with us within TPO? Because at that point, I'm going to be giving just a quick introduction in the laws of market dynamics. Don't be shy if you're not familiar with it. Let me know, because if you are not familiar with it, we can, quickly go over some rules. Right, so Angelo is not familiar with it yet. That's perfectly fine. I'm happy that, you're coming up for it. Let me just copy and paste some shit. TPO is still a new concept to me. Okay, let's go over that briefly, because at that point, because if I'm going to be talking shit right now, then, you can't really following along. So, and it applies to TPO's time price opportunity. It's basically what we use within VWAP as well. It's the rule set. But getting rid of this. And long and behold, we've got a copy paste here. All right. let's get this into the screen and let's, draw a nice little profile there. Right, let's quickly go over it. I didn't invent these rules, right? I didn't invent time price opportunity, right? It's just, this is the norm. Value is all we know, meaning we're just trading value, nothing else, based on the laws of market dynamics. Law number 2, price recently accepting inside value will attempt to traverse the entire value area. What does that mean? It means when we have a TPO profile, does everybody know how a TPO looks like? It looks like this, right? If you see these charts on Twitter, this is market profile, right? TPO. Now, rule number 2, when we accept within value, we will attempt to do what? We will attempt to traverse towards the opposite side, right? Rule number 3, price recently accepting outside of a value often leads to continuation into the direction of the break. Well, what does that mean? Well, once we break above value area high, this is value area high there. Value area high, value area low. Once we shift condition there, where we go from a bracketing environment towards imbalanced up, we are likely to head into the direction of the break, right? Rule number 4. Price often retests areas where the imbalance condition has shifted, meaning if we do break away from value, what do? We look for longs around the area where that condition shifted. This is the area, right? So if we're breaking above value area high, we're looking for longs around value area high. If we're breaking below value area low, we're looking for shorts around value area low. 5, we expect more of the same until proven otherwise. If we're bracketing within this value, if we're trading like this, right? Don't be the guy that's like, once we start trading towards value area low, don't short this thinking, we're going to go lower, Timmy. No, we're not. We're rotational within value. Don't be the guy once we're trading towards value area high. Oh shit, Timmy, we're going to break higher. No, we're not. We're expecting more of the same until proven otherwise. And you can, let's just finish them all, fuck it. Price often reverts to prior areas of established balance. That means if we're having this value area, previous day value, and the value area from that day prior to the day is the previous value area. Let's say that we accept above. Where do we go? We go towards previously established value, right? That value area low. Piece of cake. Auctions are choppier inside the middle of value. You will often see me talking about this on Twitter, where I'm like, guys, we're trading in the middle of value. I'm not going to be trading there, because often what happens is that we're just going to be fucking around like that, right? We want to be positioning ourselves around value area high or around value area low for that matter. Not in the middle of value. It's shit. Spectrum of opportunity means, if you're looking for trades at the end of the day or at the end of the session, should you really be opening up fresh positions, right? Is it really wise to be opening up a fresh trade when the day almost closes? In my opinion, it's not. It's better to just wait until there's a new value to work with. 9, exception to the traversal attempt is a strong point of control rejection. So in rule number 2, we accept within value. And then after this, we're going forward, right? We accept within value. This is the point of control, right? In an event where you'll get long here and you're like, well, shit, I've read about the traversal rule. We're going to go towards value area high 100%. I don't care what happens. But the only exception to that rule is when we have a very harsh rejection at the point of control. Now, what's the point of control? These blue lines are the point of control, right? It's where majority of the auction is taking place. So if we're rejecting there, you don't really want to hold on to that position, right? At least take profits and scale your invalidation or something along those lines, because we can definitely be setting up for a rejection. And then number 10 is compression. Think of this like the bouncing ball effect. Let's say that, we start to accept back within value and you get short there because, number 2, traversal attempt, right? We need to go lower. And you use all of these rules for VWAP as well. It's the exact same thing, because VWAP essentially is a bell curve distribution as well, right? If we take a look at this, what is this? Let me draw it out. What's this? Value area high, value area low. Distribution, right? What's this? VWAP, point of control. What are the extremes, right? Standard deviations 4 and whatever. What's this? Oh shit, this looks an awful lot like a TPO, right? Like a market profile. All right, so same concept. Going back, compression. So let's say that we start to accept backward in value. And imagine that you're holding a ball in the water. I always, I don't know why, but I think this is the easiest way to remember it. Compression. You're here, right? You are here, right there. And let's make it realistic, right? You've got one big ass wiener there. That's you, right? This is us. Realistically. And you're holding down a ball in the water. And each time when it comes back up, you're pushing it down. Each time pushing it up, but you're pushing it back down. It's compressing into the value area high. This is not what you want to be seeing when you're looking for shorts. Eventually, you're like, fuck this. I'm scratching my big ass weenie and the ball pops up, right? Does that make sense? This beautiful drawing of, I mean, to me, it makes sense, right? But if you're looking for compression, if you're spending too much time at a certain level and it continues to go back up, shallow retracement goes back up, shallow retracement, at that point, it is likely to break upwards again, right? A lot of sense, right? That's it, boys. That's it. That's it. Come on now. Never make more sense. I mean, this is the education that we're coming here for, right? All right. So, that being said, everybody who was not familiar with market profile and just had a quick, super short introduction with the rule set, it kind of makes sense in terms of why it's relevant. Let me know if it doesn't make sense. Let me know as well, but just keep in mind, it's a super swift introduction. So if you're still like, fuck me, like, I don't know what you're talking about, I kind of understand that as well, but I just wanted to do a quick intro. Because at that point, moving forward. So what if we compress above value area high? Well, at that point, we're bullish. Because what? Law number 2. Or it depends. If we accept above value area high and we continue to compress, let me just quickly answer this question. Value area high, acceptance above. If we compress like this, right, then that's bearish. We're likely to break back within. But if we trade above value area high and we compress like this, right, that's bullish. The dick metaphor really made it click. I mean, I know, right? The moment I start drawing dicks on stream, it's always a success for everybody. Don't know why that is, but you know, we're just dirty minds. All right, moving towards this chart. So we've discussed the profiles and we've discussed why it is so important. One thing that I also want to discuss is what I use within TPO. Do all merge within this profile. If we take a look at, let me just, I don't really fancy zooming in. Is this all clear for everybody on the stream right now? If we take a look at this profile and we take a look at that profile, let me just get rid of that one. Does everybody see that this value area high and the value area low from this monthly profile is in the middle of the previous month? Is that clear? Can you guys see that? I'm not sure if you're watching the stream on mobile or whatever, or if the quality is shit, but it's important that you see it. Exactly, Jay. It's a composite. So this is what we call merging profiles together. So whenever we see value overlap like that, when the previous day has a value overlap, or in this case, the previous month has a value overlap of 50% or more, we can merge these 2 months together and have a bigger range to work with. Now let's see what happens. Right click, merge. Damn, that's a good looking composite, right? Nice thick distribution in the middle, point of control in the middle. I like that, right? So what do? Control D, right there, extend drawing, boom. Value area high, value area low. Now let's zoom in. Keep in mind, this is the composite, like a 2-month distribution from the previous all-time high, yeah? Pretty important. Let's zoom in towards the current situation. This was March, last month. Now, the green dot here is when we open up within that 2-month composite. Who remembers what one of the rules was? One of the rules with the market dynamics is that we expect more of the same until proven otherwise. So if we open up within the 2-month composite, what are we going to be expecting? We're going to be expecting resistance, support, resistance, support. We're expecting a ranging environment between the two extremes. Angelo, what if you had a P-shaped distribution? It truly depends. I don't really care if it's a P-shaped distribution as long as the value overlap with the previous month. If I have a 50% or more value overlap and the distribution or the composite looks like this, I'm all game for it. I think that's a quality composite. Okay. Now, in this case, the month opened up within the 2-month composite. And at that point, I'm writing down in my journal, like, dear diary, today I'm going to be losing it all, right? That's the first statement that we always write down. And then I'm like, I'm going to be looking for shorts there, longs there. Because from a market profile perspective, we are rotational within this bracket. However, another rule set is that when we start trading and accepting back above that composite, when we trade above the value area high, what did the rule say? It said that two things. One, we're likely to remain imbalanced up into the direction of the break. That's one. Number two, the origin where we go from a bracketing environment towards an imbalanced up market is often going to be retested and remains support until proven otherwise. How much important is that 2-month composite value area high? Let me show you. Why are we not able to trade below? Why is the exact low of this month at the value area high? That's how important it is. I don't really care if it's 5 years old. All that matters is that I know a lot of TPO traders are eyeballing the same pivot, right? If ever, do you know why Fibonacci works? It's not because it's some magical number. No, it's because majority of the people look at the 0.5 or 0.618 retracement tool, right? That's why it works, because people look at the same pivots. So to answer your question, this is how relevant it is. You can clearly see the interaction with the value area high, right? So that's why it's relevant. Now that brings me towards the following statement, right? Last month, Bitcoin was trading inside that composite. Then it managed to accept above the composite value area high. And at that point, it was unable to accept back within that composite, indicating that buyers are still in control. So now we have established that also on a viewer perspective from a yearly and a quarterly time frame, if we take a look at the TPO with a monthly profile, we know right now that our line in the sand for longs is going to be the 2-month composite value area high. Let me show you on the chart. This chart, the 2-month composite value area high, 64.6. Look at the interaction. Do you need to know more, right? These are real levels that you want to be trading, not some hocus pocus imaginary line, right? It's just an auctionable level that we can use to facilitate trades, similar to the previous quarterly value area high. No surprise that buyers are stepping in, okay? So if I were to summarize right now, before we move towards some other final metrics, if I were to summarize what we've just discussed, I could argue that based on a yearly, based on the quarterly, I'm going to be remaining cautiously bullish on Bitcoin for as long as we are unable to accept on a high time frame basis below what? In this case, I'm going to be saying below the 2-month composite value area high. Now, why am I choosing this level over, I don't know, the quarterly or the yearly developing value? In my opinion, if we're trading below the lowest point, which is in this case the 2-month composite value area high, if we're trading below, that means what? That means that we're trading below yearly value, right? This is shit. That means what? It means that we're trading below quarterly value. So that basically indicates, or that tells you that, all right, well, I was bullish all the way, but you know, at this point, if we're trading below the 2-month composite value area high, what does that mean based on the laws of market dynamics? It means that we're trading back towards rotational environment all the way back. Not saying that we're going to be seeing it, but just be mindful that once we break back within that composite, this is going to be one hell of a resistance to break back through, because it lines up with yearly value and quarterly value. And at that point, purely based on the laws of market dynamics, what are we going to be targeting? We're going to be targeting value area low. What's value area low? It is at 55.6. Well, wait a minute. 55.6. What's quarterly VWAP? 55. Shit, what's yearly VWAP? 55.5. Okay, so now we've established what? We have established that our bullish line in the sand is going to be the 2-month composite value area high, 64.6. Why? Because if we trade below it, it means that we're trading below yearly developing value. It means that we're trading below previous quarterly value. And at that point, we expect it to trade towards 55K. Because 55K is a 2-month composite value area low. It is a yearly VWAP. It is a previous quarterly VWAP. And that's it. Is this clear on how I break it down? Using VWAP, using TPO, using a bit of everything. Do let me know. If there are questions so far regarding VWAP, regarding TPO, now is the time. So, Alec, if the value area low and the value area high fit within the previous composite, merge. Let me make it clear for you. Previous day, previous week, previous month, previous year profile. Doesn't really matter, right? Next profile that opens up needs to have either a full overlap with value area, right? This is the value area. It needs to overlap with the previous value, or I want to see at least 50%, right? 50% of that value area overlapping with the previous profile. If that's the case, we can merge together, okay? Now, there are more rules to it, but to simplify it for now, this can definitely be a great starting point. What you want to see is when you merge profiles together, the end result needs to be like this. It needs to be a nice thick distribution like that. If you're getting a distribution that looks like this, where you've got basically two distributions in one profile, at that point, nope, not a good merge. Okay. Jay, quick question for higher time frame levels. What do you want to see for acceptance on lower time frame, and how can you trade these big levels on lower time frame? Yeah, that's a great question. In terms of a higher time frame invalidation, I would say stick to 4-hour charts, 12-hour charts. As you know, if you back test it, you can clearly see what a genuine shifting condition is on the yearly time frame, right? This isn't determined by, for example here, right? This is a genuine break above value area high. Look at this beautiful fucking long entry there on the yearly. This isn't determined on a 30-minute chart, right? You've got plenty of time. Now, lower time frames, I'd say there's numerous things that you could do. But for now, this morning when I took this short there, we've got range high, range low, right? This is where everything comes together. We've got the rejection at the previous week value area low, and then we're breaking back within the range. Slightly above range, we've got 30-minute supply. And then before we retest it, we've got, look, if I were to get rid of that, do you see this gap there, right? We have some time and space there, right? On a 30-minute time frame. We tack into the supply, and then the next 30-minute candle closes below. This is a short invalidation above the high, and you can target previous quarterly value area high, right? This is a genuine shift in my opinion. And I almost never go lower than a 30-minute time frame. So I would say if you're looking for a lower time frame shifting condition, just stick to your 30-minute time frame, bro. Seriously. 30 minutes is all you need. Now, In this case, and I'm thinking about if there's anything else that I want to discuss because I don't want to make it too long. But in this case, would I look for longs, right? Because we did tag the previous quarterly value high. Now, keep in mind that I'm still short with my stops at break even there, and I took out 80% of the short there, right? But now that I'm streaming, I can't manage the trade, so just going to go with it. But will I look for longs here? Not really. Why is that? Well, it's because we're still trading below previous month VWAP. And if I were to show you guys, let's see this sweet on the monthly, like that. Let's go towards an H4 chart. Reset this chart view, get rid of the drawings. Right there, right? Let's go towards an hourly chart. All right, so acceptance back within monthly, previous month value, right? Rotational between these two extremes. Now, what happened during the overnight session? Well, yesterday I was bullish because we're accepting above monthly VWAP. We saw the initial reaction there. I thought, well, you know, it's looking good. Then I woke up this morning and then we round trip that point, right? And then we had this candle basically rejecting it. So even though that we're trading at previous quarterly value high there, I still think that if we truly are going to be bullish, it needs to show me the willingness to get back above this pivot. Let's say that you're a price action trader, right? Range low, range high. We have an up close candle there before we check out the lows. If we're going to be doing this, right, like that, and then we find support again, this becomes what? Becomes a deviation. What's going to be the next target? Pending liquidity above the high, equal highs into what? Into the value area high from the month, right? So I think even though that a long entry is definitely setting up here, I would like to see a clean break above, right? Lining up with the anchored VWAP from all-time high, resistance, 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 right? Yesterday, tried to break above. Now we're back below. So if we're going to be looking for longs, I need to see a genuine shift above, which means time and space between a retest. All right. That's basically it today on Bitcoin. I wanted to discuss a whole lot more, but otherwise it's going to be going to, you know, a bit too much information, I think, during one stream. Let's do another stream soon where we go over some altcoins, because, you know, we also get a lot of questions regarding, you know, is there going to be an alt season? I think yes. You know, some other higher time frame plays, but I'm going to be capping it for now. I think this is more than enough. This is what I initially wanted to do. Is that clear for everybody on what we're going to be trading, where the invalidations are, and so on? And more importantly, if there are any questions left, now's the time. Oh, my fucking hay fever is killing me as well. Jesus. Oh, so poor highs. That's a great question. Let me go towards it. Let's get in this chart. So poor highs is essentially the same as an equal high. But on TPO, it is represented by two consecutive TPO blocks next to each other. So when you're trading, you want to see X's above the high, right? When I'm taking a short there, I'm like, wait a minute. There isn't a whole lot of conviction at this high. There's just two equal highs there, two blocks. This is a poor high. And why do you don't want to see that when you're looking for shorts? Why is that? Well, you want to see conviction. This isn't conviction. This right there, that selling tail, this is conviction. This is the other time frame participant telling you that, fuck you, we're not going higher, we're going lower, right? That's the trade that you want to be taking. So whenever I'm seeing a poor high, whenever I'm seeing a poor low like that, I know it's a shitty trade. I appreciate that, Grant. I appreciate that, man. Hope you're well. Hope you're well, man. We've been at it within the group. It's been a pleasure. Anything else? Anything else regarding what we've discussed today? This one is based on an aggregation. That's right, man. Approximate win rate. Well, I mean, it truly depends on the market conditions. Like usually it's good, and I think win rate means I can't really tell you my win rate because the way of how I trade, right? I try to when I'm chipping in or scaling out, scaling in, then I don't usually get the correct hit rate on CMM. But I think you shouldn't be blindfolded by some of the flashy penal cards on Twitter. Just do you. So we are going to short 68K. I don't know, bro. I don't know. Why don't I know that? Well, do I have the fucking VWAP chart here? VWAP. Give me the VWAP. It's just about consistency, really. Exactly. Win rate has nothing to do with it. I can have a win rate of 30% and still be profitable. Right? It's just about how, what type of trades you're taking. Look at this. Nice 30-minute high volume point of control rejection bar at the previous quarterly value area high. This was such a good long. Fuck me. Where was it? Nice. Explains the search higher, right? 30-minute high volume rejection bar where at the previous quarterly value area high, entry, stop, there we go. Acceptance above weekly VWAP right now. It's looking good. Previous month VWAP right there as well. I mean, if it can show me, well, we're still struggling with previous day value, but it's looking good. This was a nice reversal setup. How do you trade when we are at all-time high because there are no previous value? At that point, I trade with developing value. Developing value on the day, developing value on the week, right? VWAP. This looks like a retest of the 3-day composite value area high. Value area next to 10 previous value area low, may not reject in that case. Yeah, that's exactly what I'm thinking as well. Because from a TPO perspective, like what we just discussed, let's get rid of this. Cut drawing there. So we have 1-2 days of what? Overlapping value. Right click, merge. This was yesterday, right? Where do we go? This is what we've discussed as well. Open up within 2-day composite. Auction lower. We fail to break below the 2-day composite value area low. Auction higher. We accept above the most recent 2-day composite value area high. What do? We come back down. We're unable to accept back within that composite, right? No time and space. And now we're trading upwards. So from a TPO perspective, it's looking good. From a VWAP perspective, we're now starting to flirt with previous month VWAP. If we can have a genuine break above, I think, like we discussed in the beginning of the stream, guys, this is still high time frame support. It is still high time frame support. And, the funny part about all of this is if we go back towards this chart, and let me clean up the shit that we've drawn. Like that. The halving is within 16 days, right? Now, I'm not a diagonal pennant trader, meme line trader whatsoever, but we're consolidating here. The apex of this consolidation is right at that halving day. So, I mean, that's typical Bitcoin, isn't it? So I don't really care what happens. I mean, if we're still bullish, right? Why? Because we're still trading above that, our bullish line in the sand. However, if we break below pre-halving and we trade there, I think this is an excellent high time frame buying opportunity. If we, let's open up a chart. I can't recall. I've got so much shit in my list. 1 second. Alt season, no. I think time cycle or Bitcoin halving. Let me just check this one out. It's the halving VWAP. That's not it. Load layout. Then I think it's the time cycle. Also don't think it's that. It's also not VIP levels. Let's see. Let's just go with this one, right? These are the halving dates, right? If we're getting, usually what do we get going into the halving? Compression, right? What did we get with the previous consolidation during the halving? This is where everybody said it's a bearish retest, we're going to go lower. I mean, seriously, the sentiment that we're having right now compared to the sentiment that we had pre-halving in 2020 is like 1-to-1. Seriously, like 1-to-1. Consolidation, halving, boom, all-time highs. If for some reason we're getting this, where we have the halving there, and then we had, how much did we retrace from that high? We did like 40%, right? Let's say we're getting it, 40%. The worst case scenario, 40% from this high. Don't really think we're getting it, but 40%, Jesus, that will really, let's just not hope that we're getting that. That will put us at 43. I don't really think that we're getting that. But if we're getting a puke lower, I'd say a 26% nuke from the highs is something that I'd be willing to bid right there before we slowly grind upwards. And that's it. That's basically it. There's not much to it. My top-down, high time frame approach, just based on real statistical levels, lower time frames, right? Previous quarterly value area high, rejection bar there. I missed the trade due to the stream, but fuck me. This was an easy long. Where's the fucking chart? Where did it go? This one right there. Point of control at the exact wick there. Deviation below previous day value area low. Reclaim it. And off we go to the races, right? So, with that being said, guys, I think today was a wonderful stream. I want to thank everybody for attending the stream. Just smash that fucking like button already. That's one. And I hope you enjoyed it. And I will see you guys in the next one. Have a wonderful Friday. Have a wonderful weekend. Don't stress about life. Life is too good, right? Enjoy. Spend some time away from the charts. Crypto will be here next week as well, right? Peace and love, guys. I'll see you. Cheers.